Hi there, Alibaba versus PDD Holdings. Which one is better and which one is cheaper? To tell you short, both companies are cheap right now based on their valuation and their future growth rate. Now, what you have to understand about those two companies, Alibaba and PDD Holdings, is to look at their market share, the competition, which is the most important thing, because otherwise you can predict the future of those two companies. And when you look at the competition, China e-commerce, gross merchandise value share by platform. And you see that here, estimates 2025, right? Tmall, Taobao, 15, 16%. So in total, Alibaba has a market share about 31%. And PDD Holdings here, a market share around 21%. So less than 10% under Alibaba. Now, you also have to look at the other players and their growth rate, how they expanded their market share. You can see that from 2020 here, Taobao and Tmall, they had a market share over 56%. Back in the past, Alibaba was the leader, the only player in e-commerce China. Unbelievable. But then, as you can see, other players started to emerge, such as JD, and if you look at their market share, had a nice increase till 2021 and then a decrease to 16%. Then PDD Holdings, you look here, 2017, only a market share around 2%, and then they have succeeded to increase their market share 10x from 2% to 21%. Of course, those are estimates. Look here, 2024, 21%. Amazing growth rate. And now another player which had a market share of around 5% in 2020 and now 22%. TikTok. And of course, there are other players, but for the moment they are small. You see another player, I don't know how to pronounce this word, maybe you can tell me in the comments. But as you can see, the market share of this player keeps growing from 3% to 7%. So it's important to know the main competitors and how they compete, on what they compete, what are their advantages and disadvantages. Because once you know this, it's much easier for you to predict the future prices of those two companies, PDD Holdings and Alibaba in this case, in this video. And as you can see, year to date, Alibaba is up 41% and PDD Holdings up only 7%. And why is that? Why PDD Holdings doesn't go up? And here you have to look at other things. You have to understand how PDD Holdings and Alibaba operate. First, you probably know that PDD Holdings, here total revenue for the last quarter was about $15 billion or 110 billion renminbis, right? And their profits about $3.5 billion. And of course the net income was a little bit higher. Now, you also look at Alibaba. And here, as you probably know, Alibaba has more businesses, right? But we have to compare those two companies fairly. First, Taobao and Tmall represents e-commerce China. Revenue for the last quarter, 146 billion. Now, you compare this revenue with PDD Holdings, 110 billion renminbis. And as you can see, PDD Holdings is close to Alibaba. Close to Alibaba. Now, when you look at the market cap, PDD Holdings, 144 billion, right? Alibaba, 287 billion. So Alibaba is 2 times higher in market cap than PDD Holdings. And why is this? Because PDD Holdings makes money only from e-commerce for the moment. For the moment. They may enter other businesses. You never know what they can do in the future. And if you look at Alibaba, here, the other segments, they have cloud, Sineo, local services, and other commerce. By the way, here they also have some supermarkets. So if you want to include them in Taobao and Tmall, then the revenue will be much higher. But they don't break down the revenue here. So the e-commerce segment for Alibaba may be higher than 146 billion. And here is the main thing. You probably know that PDD Holdings also sells internationally. And they include the revenue here, total revenue. But for the moment, they don't disclose how much they make from international markets. And if you compare the two companies, you see that for the moment, Alibaba generates more money from PDD Holdings. But you look here at their growth rate. This is the most important thing. The growth rate over the years for PDD Holdings have continued to increase. You see some stagnation here. And for Alibaba, the market share has started to decline. And this is bad, quite bad. If this continues, this decline, then Alibaba will no longer be the leader in this industry. That's why you have to be very, very careful when you invest in this market, China e-commerce especially. Because you can see what happened. Look at the last 5 years, what happened. Their market shares have changed a lot. New players have arrived, new challenges. So you have to be very careful. Now, another important thing to make the difference between those two companies, in this case, because in other videos we'll discuss about JD and maybe TikTok, you have to look at their expenses. Because if you don't know their expenses, it's harder to predict their future. And here it's an important thing. You see that PDD Holdings makes money from online marketing services. I mean, around 50% of the revenue comes from online marketing services and the other half from transaction services. Every time a merchant sells a product, they charge a fee. And here, under, you see the cost of revenue, 6.5 billion or 47 billion, and then their largest expenses. And you see here sales and marketing expenses for PDD Holdings, which were around 31.3 billion for the last quarter, right? And then you compare their sales and marketing expenses with Alibaba for the last quarter, 42.6 billion. Now, you see that Alibaba spends more than PDD Holdings by 10 billion RMBs. It's not that much, but you also have to look at the segments. I mean, Alibaba spends 42.6 billion for sales and marketing expenses. But they have, how many businesses do they have? 1, 2, 3, 4, 5, 6, and of course all others more than 7. And PDD Holdings has only one business. Let's say 2. E-commerce China and international. So you see that the strategy of PDD Holdings for the last years have been to invest massively in advertising. They also got support from Tencent, because if you read the annual report of Tencent and PDD Holdings, you found out that they have an agreement. And PDD Holdings, Tencent has a stake. Maybe they had a higher stake in the past in PDD Holdings. And they succeed to grow this market share due to Tencent. They were able to advertise on WeChat and other platforms that Tencent owns. And this is important because without Tencent, PDD Holdings couldn't have grown so much to achieve a market share around 21%. And going forward, you have to think if they can survive without spending so much money on sales and marketing expenses. If they can do that, so you have to be aware, if they can do that, this company will continue to maintain the market share and maybe grow more in the future. And of course, they also can expand into other markets. If you look at Alibaba, PDD Holdings can also offer logistics services, local services, cloud computing, and maybe digital and entertainment services. They can also do that, or other things. They can expand in other areas. Because if you look at their cash position, they have 45 billion in cash. And you have to ask yourself, what will they do with this money? Will they acquire other companies, maybe internationally? They want to expand the e-commerce internationally. Do they want to invest back into the business, improve their platform? They already do that. Or they may want to expand into other markets, which can help to improve their position in the e-commerce channel. And here is the thing, you have to understand what their next steps will be. If you can predict that, it's much easier for you to assess the future of this company, PDD Holdings. And same for Alibaba. So going back to the competition, here the market share between all these companies. My opinion for the moment, Alibaba is still a leader. Because you can't operate a large e-commerce platform without logistic, right? Without having a good network logistic, right? Both domestically and internationally. So sign-now is a must for e-commerce China international. Second, you also need some cloud services to store your data, to process that data. And these come hand in hand. Cloud services to their large e-commerce platform. Then local services, delivering, maps on other services. Once you have a large platform, you also need some local services, which complement each other. Then, how do you promote your platform? Through digital media and entertainment. That's why Alibaba continues to invest in this segment, even if it is unprofitable. And they also started in the past to do some local supermarkets. Of course, they started to sell those markets because they were unprofitable. They didn't succeed to achieve high margins. And now, when you compare all these businesses, just ask yourself, who still has the moat in this industry? Of course, also PDD Holdings has an advantage, their partnership with Tencent. Tencent provides the cloud, social media to advertise their platform, and also some deliveries, because Tencent is also invested in other delivery companies. So PDD Holdings depends a lot on Tencent. Their back is Tencent. Taobao and Tmall can survive alone because of Alibaba, but PDD Holdings can only survive with Tencent. And of course, going forward, as they have accumulated so much money, you can see here, 45 billion, and now they are profitable, they might be able to rely on themselves to build their own ecosystem. So this is my view on those two companies, Alibaba and PDD Holdings. And as I said, both companies, based on their earnings and their future growth, are cheap for the moment. If you want a valuation for PDD Holdings, you can join my membership, and I will do a video only for you. To do that, you go to my profile, join, scroll down and press join. And by the way, do this from an Android or laptop to avoid extra fees from Apple. And if you want more to know what I own, my portfolio, or if you want to learn more about investing, I have an investing course from zero to expert. You join this Titan Investor. So that's it for this video. And if you have other questions, please let me know in the comments.